Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In session 26, we look at closing stock. The objective is to record closing stock, then trace the double entry and identify the affected annual reports. Now, closing stock is the value of either raw materials, work in progress, or resale stock at the end of a financial year. Now, if it's about business dealing in buying and selling, then the only relevant category is resale stock, referring to finished products available at the year end. Now, closing stock has got some connotation in regard to traditional or accruals accounting. As far as cash accounting is concerned, there is no closing stock. Basically because all stock that is paid for is directly written off as an expense. So there's nothing like closing stock. Much as it may be available in the business, there is no adjustment relevant at the year end. And that's why we are saying closing stock or not closing stock. Okay? Now, because our simple accounting method applied at the moment refers to cash accounting. However, we need to have an idea of how closing stock should be recorded. So when we refer to closing stock, then we are leaning towards traditional accounting, whereby year-end adjustments have got to be made. Now, following our approach of cash accounting, we shall need to reverse opening stock. Let's see how it is at the moment. Let's have a look at our device and then we'll dwell deeper into that. Let's have a quick look. Now we'll look at opening balances. Okay, we've got an opening balance. Let's see how much is the opening balance. And the opening balance is 1500. 1500. And then we'll look at our expenses. Let's look at our expenses. We're going to look at report B3. Let's go to our mini year-end reports checklist. Notes to financial statements. Let's see if we have closing stock in here. Now we've got the all expenses account, which is G3. Now, do we have opening stock on here or not? 1,500. We don't have 1,500 here. That means the stock brought forward remains on the balance sheet, and we are assuming that the closing stock is roughly the same value as the opening stock at the year end. So there is no closing stock in there. So before we can record the closing stock of still 1500, we need to make an opening year adjustment, whereby the opening stock of 1500 becomes an expense. So let's get to our device and we're going to use the two-entry form. We're going to use the two-entry form. So that's a two-entry form. And we're going to transfer the 1500, sorry, 1500 that was brought forward, and we're going to call this opening stock. Opening stock. We scroll to the right. Document number. We are going to refer to document 11. There's no other document to refer to. And then here we are going to credit account 201. So account 201 should be below here. That's 201, 201. Okay, and then we debit the all expenses account. We debit the all expenses account. Since we are using a single expense account, the other option, we can still debit the opening stock account. It does no harm. We can still open. Okay, let's record it onto the opening stock account and see. Now that is opening stock account is account 21. Now that, okay, yes. So what happens is that opening stock is now becoming an expense. So we're going to see the expenses increase by 1,500. So we click save and next. Now we're going to try to see the impact of this. Now the only problem, this should it be done in month 1? Okay, it doesn't matter. It's still within the financial year. Okay, it's been done in month 12. Let's look at our profit. Let's look at our notes to the profit and loss account. Let's look at our mini year-end reports checklist, and then we'll look at notes to financial statements. Now let's see professional costs. Now there's something we can't see here. The 1,500. What has happened to the 1,500? Should be not okay. Oh, that is, wait, we can't see that account. Let's go to G3. There is a problem here. There is a problem. Let's try to investigate this. We're getting into investigation at the moment. Let's look at C1 final trial balance. C1 final trial balance. C1 final trial balance. Probably didn't save that transaction. Probably didn't save that transaction. Let's have a quick look at our transactions list. We probably didn't save. Let's find. We're going to the transaction edit now. Transaction edit. We're into investigation. 30th March 17. Okay. Yeah, the second entry went to the wrong account. Good. We are now correcting. It went to accountancy instead of, all right, this should be opening count 21. That's where it should go. So we can update. And check. It's been a good experience to investigate that together. Right, now we go back to our mini year-end reports checklist, and we want to look at B3. We're taking some shortcuts. Yes, great. Yeah. So our opening stock is here on note 3. So the expenses have actually increased by 1,500. Initially, we had only 18,979. It's now 20,479. Now, we need to maintain our cash accounting approach. So what we've done is to make what should have been an opening year adjustment, whereby opening stock becomes an expense, and then the year-end adjustment reverses that effect. So we're now going back to our closing stock now. We are going to record this one as a year-end adjustment. And then remember, the source of information, this information should be the stock taking records, which ideally should be a list of stock items held after the year end, at the time of closing the year. Should be a list of stock items held at the time of closing the year, and they are valued at the cost price. Cost price. That should give us our closing stock value. However, we've got this value here of 1,500, and ideally it's aimed at maintaining our cash accounting approach, in that we don't consider stock as an expense. So we're going to record this. Let's go back to our device now. Okay, now which form should we use for recording closing stock? We have a special form which is in year-end adjustments, and that is form number 17. Now, form number 17, let's see. It gives us three options here. We either have stock of raw materials. We got raw. Okay, this is finished products. We've got raw materials, and then we've got work in progress. Now we should assume that these are finished items. Finished items, or we select 201, and then there is no option for this lower box. There is no option for the lower box. So those are the two boxes, and ideally we should be typing in the 1500 there. Okay. However, there is another approach. So let's close this form. This is the closing stock form. Let's try to make this smaller to fit in the window. Okay, let's close this form. Let's go back without saving. And we're going to use the two-entry form. Now remember, this two-entry form can be used for any kind of transaction, provided there is no VAT. And that transaction requires only 2 rows. So this one can serve that purpose. Now, okay, let's change the year end to the 31st. That's the very last day of the financial year. That is 31. We set that one. And the next thing, okay, let's change let's rotate our device very quickly. All right, now the next thing to do is to specify that this is a year-end adjustment. So we select YE, year-end adjustment, and then the next thing is the closing stock account is going to be debited. That is account 201. That's account 201 is going to be debited. Okay, let's close that. 201, not yet. At times, is it a double click because we're using a mouse? It's not behaving. Or should we say closing stock? Okay. Times when you combine Android with Office. This is closing stock. No, it should be the stock account. Should be the stock account 201. Right. Okay. Is it searching or it's not? Let's try that. Let's try that. Let's change our orientation now. Rotate this. Should see more accounts. Now we're saying stock. That's account 201. That's the one. Yeah, I've got to redo something. Yes, I had to pause and do it on the actual mobile device because it wasn't responding to the mouse. Now let's see if the mouse will accept. We drag it this way, and the amount we're entering is 1500. Let's see, 1500. Okay, and the narration is closing stock. Closing stock. And then the document number is 18. That's 18. Click on the device. Now our save button is below here. We save and close. That has been done. Now let's try to trace the double entry very quickly. Now this is a year-end adjustment. Do we need to trace the double entry? Probably not. We can confirm that on report C1. Yes, we can confirm that on report C1. So what we're going to do is go straight to the mini year-end reports checklist. Of course, it's available in the GL. Okay, let's check on that one quickly in the GL. In the general ledger, where should it be? Year-end adjustments, periodic tasks reports. Yeah, let's have a quick look. And then we'll look at P5. P5, and the month we should look at is 13. Do we have month 13? Good. We don't have month 13, so we don't have. All right, okay, let's cancel that. Anyway, we shall trace it. We shall trace it. Let's click on that and then go back after it's done with the checking. Okay, so we are going to the year-end reports, and in here we're looking at year-end adjustments. This is another way of approaching report C2. Now this one shows the year-end journals. So we basically have this closing stock of 1500. Let's see. Yeah, that's a 1500. Okay, let's go back, and then we're going to check on report C1. Now C1 is going to show the double entry of the 1500. The 1500 can be seen there. Now that's available on account. It's been done on account 41 and account. Okay, let's rotate this device quickly. Quickly. That's the 1500, the year-end adjustment. So we've got that account credited and this one is debited. That's the closing stock. As simple as that. That's the closing stock. Yeah. So now let's see this on our notes to the balance sheet, notes to financial statements. Quickly, we're going to see the closing stock in there, and we're going to observe that now that 1500 was added and is being subtracted, and the aim of that, we need to maintain our cash accounting concept principle that we are following, that it's only all expenses that we are using. But of course, we just wanted to use an opportunity of illustrating how closing stock is recorded. But ideally, we are maintaining our cash accounting approach. So that is why we said closing stock or not. Okay, so we started with an opening stock reversal, then we recorded the year-end adjustment, and ultimately we end up with only the expense figure of 18,979. So closing stock and opening stock really have got a negative and reversing effect. That brings us to the end of this session. In case you've got any questions, please send us an email on admin@practical-accounts or find us on Skype as accounts coaching or Moses at DIY tax return. We're also making an effort to get on to WhatsApp. WhatsApp might be easy for you. Thank you.